Hello and welcome to Bloomberg. Cohen, Dagam and I are here to wrap the markets for you. Well, the Indian stocks retreated as the markets headed into that all-important Fed meet week, which will of course set the course for the markets. This week, a 5% rally in Brent crude dented sentiments further for the Indian market. So, the Sensex extended its morning losses and the Nifty fell about 90 odd points or over 1%, ending close to its lowest point of the day. To end at 8,170. In fact, this was even after we had seen 4 straight days of FII buying into Indian equities till last Friday. That brings me to the Bloomberg Quint poll of the day. We had asked where the Nifty will end in today's session as it heads into the federal meet week. 54% said it would end below 8,200. 33% had expected it to end between 8,200 to 8,250, and a small 13% minority actually expected the index to close above 8,250, but 8,200 clearly gone away, Agam. And surprisingly, the weakness was spread across sectors. So not a single sectoral index which actually ended in the green zone, but the India Volatility Index saw a big jump today.
Yes, it did. But look, so with respect to the Nifty and the Bank Nifty futures, we've seen an addition towards the open interest. Now, it's easy to say that it is going to be towards fresh shorts, but I will not hold, I will not make any comments before I see the final numbers in the Bhav copy. That is what is going to determine whether or not we have seen fresh shorts, because firstly, a lot of traders have already been gearing up for the Fed meet, which means that they've already had their positions in place. So there is a slight chance that we could see some amount of consolidation after the kind of decrease we have seen. Yes, we have seen an increase in volatility index, but that is expected because we are moving into an event, and that has to lead to an increase of option premiums even as we move into the Fed meet. That said, let's also just take a look at what's happened in the options market. So we have seen an increase in the 8,200 call and the 8,300 call. So we've seen writing, which means that for now we've seen a lot of traders take bets against the fact that the Nifty could move above 8,300 in the next couple of sessions. But of course, these dynamics can change tomorrow. With respect to maximum open interest, well, that continues to remain in the 8,000 call, 8,000 put and the 8,300 call. So that's your 300 point range for the Nifty going into the next couple of sessions. But once again, I will wait for the numbers. I will wait for what the FIIs have done as well with respect to their positions in open interest. And that will determine the course of the next couple of sessions as well.
Correct. Having said that, we need to discuss the impact of crude oil because India remains a net importer, and hence we are seeing that significant impact. In fact, many sectors and stocks related to oil have seen significant movements today. So just want to tell you that Brent crude touched $57 a barrel today. So that is a 17-month high after the non-OPEC nations also agreed to an output cut in 2017. So on the back of that, we saw ONGC run up about 1.5%. This has made fresh 52-week highs, and as you can see, it's the top Nifty gainer. On the other hand, negatively, the stocks which have been impacted, of course, BPCL stands out, a loss of 3.5%. That apart, you also had stocks like Asian Paints. You had some non-Nifty stocks also that I want to mention: HPCL, Berger Paints, Asian Paints, Jet Airways. All of these corrected by anywhere over 3% because higher crude oil prices actually means a negative impact on margins. So the crude happens to be raw material for all these companies, so you can clearly see the impact. That apart, on the Nifty, you also saw the cement pack that was really doing weak. So Ambuja Cement, you had ACC, you had Ultratech Cement, all of these were on the losing end. The two-wheeler space was another place where we were seeing some sell-off. So you had stocks like Eicher, you had Bajaj Auto, Hero Motocorp, all of these were again seeing some sell-off on the back of demand concerns. Remember, Bajaj Finance today said that they have seen loans taking a hit, the two-wheeler, three-wheeler loan category is taking a hit on account of demonetization. So Bajaj Finance, I'm sure, figures in one of the top mid-cap losers.
It is, so in the broader markets too, once again, and we have seen a little bit of a reversal in trend in this case, because today we're looking at just 3 gainers as against 7 losers. That's what the market breadth is telling us right now. But I'm going to start off with the gainers in today. Rolta India has been locked in an upper circuit for the last 2 hours of the session. The reason behind it is that it's seen a substantial expansion in its quarterly margins, and that's been aided by the spatial solution space, followed by Sharda Cropchem, which has gained 7.7%. J Kumar Infra Projects, after a lot of weakness in the past couple of weeks, is looking at a little bit of a rebound now, so that's gaining about 7%. Ahluwalia Contracts, Aban Offshore, of course, so we spotted that on BQ Spotted today. Suntech Realty, Tata LC, as well as Nalco, all of these stocks gaining well over 4% today. Let's take a look at the gainers, and this is where the cuts are deeper. Shraddha's also already mentioned Bajaj Finance, and we have seen a decline of 5.9% there, followed by Whirlpool India. Berger Paints continues to face pressure. This is, of course, after crude has moved well above the $53 mark, and along with Berger, you'll also have weakness in Pidilite Industries similarly for the same reason. Crompton Greaves, Lanco Infratech, as well as HPCL also looking at some amount of pressure. And like I said, once again, we are going to be looking at the underlying variables which will determine the course of the market over the next couple of days. Do remember, the last Nifty company for this quarter will be announcing their results tomorrow, Coal India. We're watching out for that one. And of course, we're also keeping an eye on a lot of commentary from a lot of experts as well as to what they expect from the Fed. Of course, it's almost a given, as a substantial amount of analysts out there are expecting a Fed rate hike. So we're also going to be keeping an eye on what they are expecting and how they're expecting the markets to move after the Federal Reserve event. But for more updates and news, do catch us and visit us on BloombergQuint.com. And of course, you guys can always otherwise catch us on the social media, on Twitter as well as Facebook. But until then, it's goodbye.